G'day, Ziggy here, CEO of 3P, and I have with me Director of 3P Accounting and Tax, Chris Borg. Chris, welcome.
Hello, everyone.
Now, what we thought we'd do today is just provide an update on two of the key measures that the federal government is putting in place. And they're in the process of putting in place, they're in the process of getting royal assent, which means that it becomes law. Now, the two that we're going to be looking at are the JobKeeper program, as well as the business loans that are being provided. So what I thought we'd do, Chris, is we might look at the JobKeeper program first. How about we do that one first?
Yeah, sure. Sounds good. A lot of questions around that, so I think it's important to cover it. Yeah.
Yeah, there are a lot of questions from employees, but equally from employees as well. So I think it's an important one. So just in a nutshell, what is the JobKeeper program?
Well, the payment itself is essentially to reimburse or to cover eligible employers and eligible employees for their wages on a fortnightly basis. So a little bit later on, we'll cover what an eligible employee and an eligible employer is. But the payment itself is a $1,500 gross payment per eligible employee of a business. So when we say gross payment, that's before tax. So essentially, that payment there is to assist any employers who have experienced a downturn due to the coronavirus. And essentially, that payment will be backdated back to March at the beginning of May like I said, to help out those eligible employers who have suffered a cash flow reduction or cash flow hit and encourage them to keep their employees on during that time. So for everything going through, that payment should begin at the beginning of May and be backdated to March for those eligible employees.
Right, okay. Now, we have a lot of clients, and I'm sure a lot of people out there are employers as well as employees of their business. Does this apply to them as well?
It does. So essentially, depending on, if the employer themselves, being a director, they can potentially be eligible if they are on payroll as an employee. So providing that they're on the payroll in March, then they potentially are also eligible for that payment as an employer of that business. There are also, I suppose as well, eligible if you're a sole trader and your business has suffered a downturn in that period. As a sole trader, you are also eligible. You can also be eligible potentially if you run a trust and you only receive distributions. There's potential for you to also receive the JobKeeper payment.
That's been one of the issues, hasn't it? I mean, in terms of, there are a lot of businesses that are set up as trusts, and therefore the profits are distributed by way of distribution at the end of the year. So those who are not employees of their trust, is that something that they can potentially register for now, or is it too late?
Yeah, so look, it's going to be interesting. We'll see when the legislation comes out, which is due to come out on Wednesday, whether they will be eligible. One of the, I suppose, issues when it was first announced was that it was very silent on, particularly directors or beneficiaries for that fact as a trust. So a lot of businesses have set up a trust where they receive distributions. They've done that obviously for tax reasons. Also, they've also done it to save them having to pay on costs such as superannuation and other work cover issues. So they've done that perfectly legitimately. And initially when the announcement was made, it looked like it was just to apply to employees and exclude, unfortunately, potentially, beneficiaries that are part of the business or directors. So it looks like now that when the legislation comes out that you'll be able to nominate one beneficiary. So beneficiaries are very broad, but if we look at it in the context of a husband and wife business who both work in the business are both eligible beneficiaries. Instead of receiving a wage, they take out drawings or distributions throughout the year. It looks like that one of those beneficiaries will be able to be nominated to receive the JobKeeper payment under that trust and therefore not be disadvantaged, which will be a relief to a lot of people out there. I know for a lot of our clients when it was first brought out, they were worried about that, particularly with the previous incentives we've been talking about with the PAYG booster. You actually had to be on payroll. So that excluded sole traders, it excluded beneficiaries, it excluded directors who maybe didn't receive a wage, received a dividend or something like that instead. They were excluded. So there was concern that that exclusion would extend to the JobKeeper payment. However, in recent days, as this has been going through Parliament, it looks very much likely that it will be extended, which is obviously good news for those businesses that are struggling right now.
Yeah. And this is one of the things, I mean, I've noticed with all these stimulus packages and the various announcements that, I mean, this is, you know, we keep on hearing that this is a new era, this is new ground, this is unprecedented times, and therefore the measures that are being taken are unprecedented, and therefore the measures are made, but it's hard to take into account every circumstance out there, and it's clear that the government does want to help as many people as it can, and therefore when the announcements like this are made, they do need to further clarify, you know, exactly who they're referring to, who it applies to, who it doesn't apply to. But I guess in this instance, the good news is there really isn't anyone that's excluded from this. I mean, there's a few obviously clarifications, but it appears that most people, if you work it out well with your accountant and advisor, most people should be able to receive some sort of benefit. Is that a fair comment?
Yeah, it is. I mean, look, you can't get everybody. There will be, unfortunately, some people who will not be able to receive it. I think, first and foremost, you know, it is designed for businesses that need it. So it's not designed for every business out there. And I think you've got to look at the criteria and need to have a look. First of all, has your business suffered due to the coronavirus? So it's not designed for businesses who are actually going stronger in this economy. They're not that many, by the way. Obviously, there's a lot of businesses that are suffering. There are businesses too that are treading water, doing the same, and our businesses are doing well. So I think first and foremost, the incentive is not there for businesses that are doing better or doing, you know, having stuff as part of the coronavirus. So you need to see that drop. Essentially, if you're doing less than $1 billion in turnover, which would be a lot of businesses out there, you need to be seeing a 30% drop off of your turnover from one comparable period to the other. Again, how that looks like, there'll be further clarification of how that's tested once the legislation's cleared. At the moment, you're looking at, as an example, you look at the most recent month of March, compare that period to the previous March 2019. That's one test. However, that could have potentially excluded new organisations or new enterprises that have only set up recently. How do you compare the previous 12 months if you haven't been there? So again, trying to expand that criteria to bring in more organisations, because you could have had a business that started up in September, October, and all of a sudden coronavirus has come and all of their growth has been, or potential has been stunted because of that. Due to that, they've got different criteria. But again, it's not there for businesses that have, you know, were going very, very well and continue and have actually gone better as a result of the coronavirus. And that can happen because they're in an essential service, or their requirements or products or services are an even further need. So again, it's there to you know, to get it to the businesses that are required. I suppose another point is that the government have been very keen to get this through and to administer it as easy as possible. If you start then tailoring it to everybody out there, then it's going to be making it very, very difficult for those, you know, for it to be administered, which means it takes longer for the payments to be made. As it is, you're going to have to wait already 4 weeks, another 4 weeks to get the first payment, even though it's backdated. So the more complicated you make it, the harder it is going to be to administer. An example of that is the payment itself is $1,500 per fortnight, and that is a blanket $1,500. So you could be potentially have 2 eligible employees. One of them is receiving ordinarily $2,500, $3,000 a fortnight. And if it's up to the employer, of course, but they can obviously get reimbursed for the first $1,500, and then the top-up payment they can obviously make on top. But then you can also have an employee who's only getting paid $600 a fortnight in that same organisation, and the payments there the whole payment needs to be passed on to the employee, not just the first 600, and then the employer can then do whatever they like for the other 900. So there's inconsistencies there where you have to top up for one employee, but then for another employee, you're potentially having to pass on and then giving them a pay increase. So there is imperfections. However, as Scott Morrison said, the reason why they're making it a blanket 1,500 for every employee is to make it easy to administer, because if you have to start varying payments depending on the employees, then that's going to be a lot harder to oversee, as it is to be eligible for your payments every month. The business is going to need to submit a report to the tax office, because that's where it's going to be administered, and actually nominate the employees who are eligible, and also report what their monthly wages are, so that the ATO and the government can ensure that the payments that they are reimbursing for, the employees are continuing. And it's going to be hard enough to administer as it is, let alone having to vary the payments for each of the employees based on certain criteria. So as it is, they try to capture as many people as they can, but you can't please everybody.
And the reality is, I mean, some people will miss out. I mean, it's this is not going to be able. They're not going to be able to help every single person in Australia. They want to help as many people as they can, get business going, and so these measures, I guess, in their opinion, do that. Okay, so this applies to. We've spoken about sole traders. We've spoken about how trusts are able to receive the payment. How directors who receive directors' fees, how they can nominate, one director to receive the payment. Does it apply to shareholders as well?
Yes, it can. It can apply to shareholders again. The criteria of an eligible business and needs to be met. But initially, just like beneficiaries, it was feared that shareholders may not be able to receive the JobKeeper payment. However, if you've got a business that's eligible, and in particular the eligible employee has been receiving dividends rather than a wage for whatever reason, then the business can actually able to nominate one shareholder. So if you've got multiple shareholders, they can nominate one of the shareholders. However, the integrity test here, which we'll sort of cover off shortly, is going to be tested, because if we've got a typical, we're talking a husband-wife setup here, and they're both directors. We've already spoken about how beneficiaries or a director, you can nominate one beneficiary or one director. It'll be interesting to see how this limitation does go with the shareholder, because potentially you could nominate one director, the husband, to be receiving the JobKeeper payment as a director, and you could also then have the wife as a shareholder receive the JobKeeper payment, although that's not actually in the spirit of these incentives, where really only one of them should be able to do it. So it'll be interesting to see if part of legislation to close that loophole, to say, well, if one director as a director is receiving the JobKeeper payment, then if the shareholder is also a director, another director, you won't be able to receive the payment. So it'll be interesting to see if they take note of that, whether they will allow both directors, one as a director and one as a shareholder, to receive it, or whether they will classify the directors and shareholders in the same group. So that'll be interesting.
Yeah, and they're obviously relying on the honesty, as you said, the integrity, the honesty of people to do the right thing, and not not here to milk the system, but really use the system if they've been disadvantaged, the business has been disadvantaged. And you and I got an email from the tax office and the tax board to say exactly that the role of the tax advisor is to ensure that things are done with integrity and to guide the client, but it's also about commerciality, isn't it?
Yeah, exactly right. So I mean, in the end, like I said earlier, the incentives have been brought out quickly. Obviously, we're in unprecedented times, and unfortunately, when you do have some particular groups of people that may miss out, the temptation is there, obviously, for those people to try and change their structure or change the way their payments, or reclassify their payments, so that they can obviously make themselves eligible for these particular incentives. Now, obviously, the JobKeeper payment itself will be a lot more broad and it'll be a lot more accessible than, say, for instance, the PAYG booster, which is purely based on employees on payroll at a particular point in time. So the most important thing here is, I suppose, that we can reiterate is that these incentives are for employers or businesses and employees who are eligible and for who are struggling. It's not there to be taken advantage of by businesses who, are not, are still doing well, because in the end of the day, there's only a certain amount of funds, and whilst we can all be looking to try and take advantage of these incentives, they really should be left for the businesses that are there, and that goes through for every incentive, whether it's JobKeeper, PAYG booster, trying to reduce your rent. If everybody does it, essentially the economy will stop. So it is there for the right people only. Like I said, we've been getting lots and lots of questions. That's why we are doing this video, particularly in regards to the JobKeeper payment, because there are so many questions: who's eligible, who's not, can we do this, can we do that? And obviously sometimes those conversations can lead to changing circumstances or changing arrangements. One thing that we have been very adamant about from the start is not doing anything that makes things change on paper that doesn't happen in reality. So we're always very big on making sure that whatever you do, whatever is done, it is reflective of what actually is happening. So, and as Ziggy just mentioned today, the ATO, in conjunction with the Tax Practitioners Board, have come out with an announcement that they will be looking out in particular for schemes that take wrongful advantage of this incentive by backdating or artificially changing a business structure or employment arrangements, which includes potentially changing the characteristics of payments from a distribution, from a dividend to a wage, in order to obtain a benefit that would not otherwise have been paid. So the ATO will take firm and swift action on people if they do this, and promoters of these schemes. So it's really, really important that if you do hear somebody say that, oh, you can do this or you can do that, that you do report this action, because like I said, then what will happen is people will do that, and two things will happen. One, money will go to the wrong people, and second of all, then the system will be choked with investigations and to check the people who are doing the wrong thing, rather than administering the payments that are be made to the people that need it. And if that's the case, then these businesses are going to get more and more into debt, more and more into trouble, because instead of receiving the payments that are eligible, they're waiting on the system to backlate all these these investigations. So I think it is a timely reminder that whether it's you're looking at your circumstances in relation to this incentive, or in general when you're looking to restructure, that you only ever change your arrangements, whether it's your business structure or your payroll, in the ordinary course of business. And when you're looking at how should I be setting myself up for the future, making sure that everything is forward dated, nothing's done in the past, because the past is past, it's happened. All right, anything that you do needs to actually reflect what's actually happened. And when you're looking at potential planning opportunities, or the way you should go moving forward, and if we do it in example of the JobKeeper payment as an example, because it's the way we're speaking now, would you restructure or change your payments, okay, irrespective of whether the JobKeeper payment is in place or not? And that's the same with restructuring anything, or you're changing anything. Is what we're doing commercial? Are we doing it for the right reasons? Okay, so these are the questions that a good advisor should always be asking. And if you've got an advisor or somebody telling you to do something that doesn't sound right, but is so easy to get, it's usually something wrong. So in the end of the day, it's about doing the right thing so that the system maintains its integrity. And that is one of the things that we're always promoting and will continue to.
Yeah, it's the first shot across the bow that I've seen, certainly from the tax office, in terms of just sending a warning. And we know that during these times, the stance of the government, certainly the tax office, has been about helping, but there's no doubt they're going to come down hard on spruikers are going to try and take advantage of the system and and take clients with them. So look, word of warning, as we get through this period of shock and, distress, we will get to a point where, the regulators do become a bit more heavy-handed and they're looking for people that they've milked the system. Okay.
Exactly.
Enough said on that. Now, just to finish off on the JobKeeper, is super guarantee payable on the JobKeeper payments by the employer?
No, it's not required to be paid. So it looks like with the way the legislation is going to come out, that the JobKeeper payment will not attract or be part of the super guarantee legislation. However, in an example where a situation where an employer is topping up the payment of the employee over and above the $1,500, that extra component, example, could be $1,000. There is superannuation guarantee payable on that to be able to pay it. But obviously, it is a choice. You've got a choice as an employer whether you do pay the $1,500 or super on there. So,
okay.
All right. So yes, you do not need to pay it on the JobKeeper payment.
All right. And how do businesses register their interest, Chris?
Yeah.
I mean, with the ATO, how do they register it?
Yeah, so look, essentially from when it was announced on the 29th or 30th of March, you've been able to register your intent with the Australian Taxation Office, which is going to be the body that administers these payments. So by registering your intent or your interest, that does two things. One, it gives you the opportunity to keep up to date with what's happening and for you to be alerted as soon as it becomes legislation and the application is available. Second of all, it then gives the ATO or the government numbers as terms of how much demand is going to be so they can put the system in place. So it's really important to register to give yourself the update, but also the government a good measuring stick so they can put the resources in place. We anticipate, like I said, legislation will be open from this Wednesday, or will be in place from Wednesday, and from about mid-April, just after Easter, the application process will be open. How that looks, we're not sure at this stage. And obviously from there, you'll be able to apply. Obviously, we are available if you need any assistance or help in putting any application together.
Okay. And the last one on this, I imagine there might be businesses who possibly for the month of March, if they compare their turnover compared to last year's March turnover, they will have that comparison. But what if businesses maybe haven't dropped by 30% yet, but do so in 3 months' time? I mean, I know that some of these measures are open right till September. Is this the case as well?
Yeah. So again, no real guidance at the moment as to what how that's going to be measured, as I brought up before, because the example in I said before is in relation to new enterprises. But again, you could have, and I have seen particularly clients that we've spoken to, particularly in the automotive industry, who actually had a better month in March because there were people thinking they were going to be closing, so they were rushing to get their services in or whatever. So now potentially in April they'll feel the heat. So again, it's not a hard and fast rule when you're looking at March. Potentially, you need to compare March to the previous year. It potentially may look at forecasts if you're putting your forecast into the application. So you may not need to compare one period to the other. It's unclear at the moment if, for instance, you need to apply for the payments by a certain date. The actual payments is going to be available for 6 months, just like pretty much all of these incentives. The government's expecting the coronavirus effect to be around to at least the end of September. So it looks like at this stage that you could be going along fine, and if you come to June, July, or whatever have you, you start to feel that drop, you may be able to register at that point. But again, it's still unknown exactly what the criteria is. But again, they'll be made to see.
Yeah, whatever the case, it's obviously the government are hell-bent on helping business through this, because the alternative is just disastrous. Losing all these businesses is going to be disastrous. Okay, so we'll just move on now to the second topic that we want to cover, which is the bank loans. And there's been so businesses are being helped in a number of areas. One of them are business loans up until $250,000. But before we cover that, interesting today, Chris, that the Australian Banking Association came out and made its official approach to credit reporting just during this COVID-19 crisis. And it said that, and I'll just quote here, it says, borrowers who are granted a 6-month deferral on loan repayments will not have their credit rating affected as a result of the holiday, so long as they were up to date with repayments prior to the economic impact of COVID-19. So what they're saying is if customers are granted a deferral on their mortgage and other credit products because of the COVID-19, then the banks will report customers as not having missed a payment or repayment, providing they're up to date when granted relief. So that's good, because that's some clarification of a lot of people were worried. Okay, well, if the payments are suspended and I don't make payments, then my credit rating is going to be affected.
Yeah, and I think that's really important that is happening, because a lot of people, I get that question a lot actually about for clients. Does that mean that I won't be able to go for a loan once this is done? I think the key message though is a couple of things from that, which is really, really good news. Is number one, you can go for that loan of $250,000, but what is your exit strategy? Don't necessarily go for the maximum of 250,000, even though you could potentially get it, because at some stage you're going to have to pay that loan back, and at some stage interest is going to come. So what do forward planning and planning your cash flows and planning for post? We're all sort of in a potential business war zone at the moment, just trying to survive. But once things will look better, how's your business going to look with that loan in place? Can you afford it? What can you afford? And I think the second thing is going to be really important is making sure that not only do you get a loan holiday or repayment holiday, but getting an interest holiday as well, because the last thing you want to be doing is being back-paying compounding interest. So being responsible and really checking the terms of your loan is going to be important there as well.
Well, it's interesting that the government is providing a 50% guarantee on the loans. Obviously, it's up to $250,000 per borrower, and these are for businesses with a turnover of up to $50 million a year, which, excuse me, which should be majority of businesses, I imagine. Interesting that the loan term is, as you said, we're wary of the loan term, but it's for 3 years. So the people aren't to think that I'll take out 250,000 and I've got this to pay off over the next 25, 30 years. That's not the case. So people really do need to take that into account in their business, even though there's a 6-month repayment holiday, as you said.
Yeah, and the big concern is that I'm not at the moment. There's been no. I'm not sure. Hopefully, this isn't the driver, but essentially, if you eventually do get on terms in that 3-year term, the loan expires, and then essentially, then if you haven't managed or haven't planned your loan and you properly, and you're still up at that high $250,000 level, and you don't have the money to pay it out, and essentially you've got to go back to the bank hand in cap or cap in hand, and you're really at their mercy with a refinance with no protection around you. You could be forced, if the bank doesn't want to refinance you could be forced to go to another lender or third party or whatever to refinance at a much higher interest rate. So you really, when you're putting these loans in place, you've got to think, well, what's the maximum loan I can get that I can pay off in 3 years' time? Even though you may not, you have to be planning for that exit.
Yeah.
And that is good business.
Yep. It's just like it always is. It's about getting some good advice. And I know that the lenders have been instructed or been guided by the government to say that they still need to complete a credit assessment on the application. So this is not just a handout of up to 250,000. It's not even an automatic 250,000, but they still need to complete a normal credit assessment. It just obviously may not be as rigorous, but they want the lenders to take into account the fact of the environment that we're in. So credit assessments will still apply. It won't be as rigorous as it has been, and in the past few years, it certainly has been rigorous.
And that's because of that guarantee as well. And I think you've got to treat this as if you're going for a normal loan. Like I said, if you're going for these incentives, it's like, well, what would you do if these incentives weren't in place? Where again, with restructuring, it comes down to the loan. How would you go about this loan and go about it if this incentive wasn't around? So having all the documentation, doing all the planning, and I think you need to, have a good advisor, good accountant planner to do that. I think also really and have a good finance broker that supports you during that process. So, you know exactly what's going on.
Yeah, it's good. And I think there'll be some businesses, unfortunately, who maybe have been struggling or treading water in the last couple of years. This will just tip them over. I mean, even with the loan, they just won't have the capacity to be able to pay that back in any way. So rather than get deeper into trouble, I think it's a way of, I think speaking to an advisor to be able to work your way through the scenario is important. Just a few final points or measures that are already in place, which we've covered before, but we've got the government assisting employers with apprentices and trainees. There's accelerated depreciation of business assets. The instant asset write-off has increased from 30,000 to 150, and also the government's helping with the operating expenses up to $100,000. Just quickly, because that's if you can just cover that bit, but because it relates to your quarterly BAS and the PAYG, just quickly cover that $100,000 of up to $100,000 of assistance.
Yeah, so that's the I've touched on it before, the PAYG booster. So that was one of the first measures announced. Initially, it was announced, I believe, minimum of $2,000 up to $20,000 was the initial, and then once the legislation went through, it increased from a minimum of $10,000 to minimum of $20,000, up to a maximum of $200,000. So essentially, again, this is another incentive to help eligible employees, eligible employers, to incentivize them to keep their employees on. So just like the JobKeeper payment, you'll get your $1,500 per fortnight. Essentially, this is the government funding the PAYG component. So on average, you're probably taking out 30% odd out of your employee's wages to pay for tax. It's like getting a 30% grant. So as long as of 12th of March 2020, you were an employee, or you were employing employees, then you'll be, and meet the turnover test, you will be considered an eligible employer. And in that case, it doesn't matter whether you've had a drop in revenue, an increase in revenue, or your turnover or your revenue stay the same, you will be eligible for this payment. All you need to do is lodge your BAS essentially, and make sure your things such as single touch payroll is being done right, your BASs have been lodged on time, or your tax return has been lodged on time. So providing you meet the minimum criteria, what will happen is, even if you have no PAYG payments coming out of your wage, as long as you have $1 of gross wages and one employee on your payroll, you will get a minimum of $10,000 that will be backdated to 1 January up to the end of June. And then you will get another $10,000 between June and September. So minimum $20,000. Anything over the $20,000 or $10,000 per period will be based on the amount of PAYG. So providing that your PAYG is over $10,000, you will be provided with a credit on your PAYG dollar for dollar. So by way of example, up until when your PAYG is $10,000 per period, you will get up to $10,000. Anything over $10,000, for instance, you might have $20,000 of PAYG, your March 2020 quarter BAS, the ATO will provide a credit for that $20,000. So you won't physically get that money in cash from the ATO, but you will get that as a credit and reduce your BAS. So by way of example, if your BAS is normally $35,000, of which $20,000 is PAYG, you'll only need to pay $15,000, saving you that $20,000. And obviously that $20,000 could be enough difference between you keeping your employees or having to terminate them, along with the JobKeeper payment. So that's essentially how that will work, and it will match a dollar for dollar up until $100,000. $50,000 of that between 1 January and the end of June, and then another $50,000 between June and September. So again, lasting that 6-month period.
Yeah, look, a lot of changes, a lot of stimulus packages, and I think we may find that in the days and weeks to come, there'll be even more that come out. But there's so much in there. And I think the key message is there's so much in there. Make sure you get advice. Make sure you look at all the criteria and the details. and make sure, really, from a compliance perspective, I think the best thing to do is to get right up to date, because then applications for loans, for PAYG, whatever it is, can be made on accurate figures. And that's what the tax office likes. It likes accurate figures. It likes things to be up to date. So there's a message there from a compliance perspective.
And make no mistake that the tax office is using this opportunity to ensure that employees or businesses are up to date. So if you've been a bit slack with your lodgements, if you haven't signed up to single touch payroll, if you haven't been paying your super, one of the things that the tax office will make sure is that you are on single touch payroll, you have got your BASs up to date, because the criteria essentially says if you haven't lodged your BAS up to date or your tax return, you won't be eligible. But obviously, if you're going to be ringing up and saying, we still want the payment, they'll be saying, well, as an undertaking, make sure your lodgements are up to date, and then we'll provide that incentive. So it's a thing. Yes, one, they want to help you, but two, they want to make sure that anyone they are helping are taking their business seriously. So if you're not lodging on time, their mindset's going to be, well, if you're actually not serious about your compliance and you're not serious about being in business and keeping your business afloat. So you need to demonstrate, and they will provide you with opportunities. You've just got to make sure that you speak to your advisor and that you are keeping up to date.
Yeah, Chris, thanks for coming on. There are many other topics to talk about, such as drawing down in super and a whole range of things that people have got access to. So we'll leave that for another time, and we want to do these regularly so that people can be kept up to date, and we can convey, I guess, the message that's coming down the line as well, in terms of the government's there to provide assistance and help. It seems like it's all being, or the majority of it is being administered by the tax office, and we, the advisors, are here to be able to help you through that process as well, because there are assistance measures, there's opportunities to get assistance, but also not to milk the system, which is never the intention. So, Chris, thanks for your time tonight. And for all of those out there going through this period, we're here to help. We're here to assist you in any way we can. You can contact me at ziggy@3pcorp.com.au or Chris at cborg@3pcorp.com.au, and we're happy to answer any questions. So fire away. Some of this we're learning and getting more information as it comes out, but we'll certainly guide you through the process, and we look forward to talking to you soon. Cheers.